Hello and welcome to this new Monday report from Bourdieu. We finally have new US statistics after the shutdown period with the employment report, but note it's for the month of September. And it doesn't tell us much more. Job creation, shown here on the left, is above expectations at 119,000, but the unemployment rate has risen from 4.3% to 4.4%, which is higher than expected. So it's a difficult report to interpret. We also had the minutes from the latest Fed meeting, which show that the decision to cut rates was made in a climate of dissent within the Monetary Policy Committee. And finally, the PMI indices from purchasing managers in the United States and Europe, which show that activity overall remains well-oriented. But the main event on the market side was the release of Nvidia's quarterly results. They were once again very strong, and sales forecasts remain high. But equity markets fell, except in Switzerland, by 2 to 4%. As you can see here, in a risk-off move illustrated by the rise of the dollar and sovereign bonds, as well as the resilience of gold. So why is that? Precisely because these figures show that the AI race led by big tech, the hyperscalers, requires massive investments for which these big tech companies are starting to borrow rather than self-finance, raising questions about the future profitability of these investments. We believe that this issue will be key to the behavior of equity markets through the end of 2025 and into 2026. The financing of AI investments has become for us a key indicator of market risk. In our portfolios, we have taken a new position in the Swiss company SGS, the world leader in the testing, inspection and certification industry. The stock has underperformed, as you can see here, compared to the industrial sector this year. But the trend is reversing. We are buying into the new momentum of growth and acquisitions, with already 18 acquisitions this year and a reliable dividend yield of around 3.6%, which is attractive given the very low Swiss bond yields. That's all for today. Thank you for your attention and see you next week.